Before we start this video today, I want to thank every person out there who sent me a letter. I want to thank everybody for the positive words of encouragement, the positive letters, and I want to thank everybody who made a donation. And I want to remind everybody, even if you can only send $1 or $2, it helps me out so much to continue to stay in the fight, to make these videos, to wake people up. These videos are time consuming. It takes a lot of my time. So I really do appreciate every one of you that made a donation. And I really appreciate everybody who sent a letter, people who are praying for me, praying for this country, and all the positive, great words of encouragement. We are going to win this fight. So again, thanks to everybody who wrote a letter. Thanks to everybody who made a donation. God bless every one of you. God bless America. And thank you so much for your support and your help. It's Thursday, March 30th, 2019. Very interesting day in the markets. Dow Jones closed up about 43, 44 points, but it was a day like a ping pong match where this thing was in the green for 2 minutes, in the red for 2 minutes, back in the green for 2 minutes, back in the red for 2 minutes, and it just went back and forth all day long until the very end. And they got the Dow Jones up about 43, 44 points to end the day. But there was no good news. In fact, it's all bad news. They were able to squeak out a positive day today, which is really surprising. But I guess when they're just pushing buttons and they got the plunge protection team and they have all this manipulation, they were able to squeak it out. But there's some really bad news. Bloomberg reported today traders yanked almost $429 million from the State Street Corp's Spider Bloomberg Barkley High Yield Bond ETF on Tuesday. $429 million came out of that bond. So where did that money go? Where's that cash going? Are people just sitting on it? Are they putting it into Treasury bonds? Treasury bonds, as of right now, this evening, the 10-year is at 2.21%. So that is a huge indicator that people are very nervous. Investors are very, very nervous. And it is a massive red flag that many investors out there think we're going into a recession. Again, $429 million pulled out of that Bloomberg ETF, that Bloomberg Barkley ETF, biggest withdrawal since December. So something to pay attention to right there. Here's some really bad news. So we're watching the bond market. It's flashing red. And as I've always said, follow the real estate market also. Pending home sales suffer worst decline streak since the financial crisis, down 1.5% month over month. This is the 16th month in a row of year-over-year declines in pending home sales. We have low rates right now. Mortgage apps are up. We have a booming economy. We have low unemployment, yet nobody can buy a house. People are losing their cars. People are acquiring massive amounts of debt. Individuals, households, people are defaulting on credit cards at record levels now. So this booming economy is not really booming at all. It is a facade. So another thing to follow, this bond market and the real estate market as it continues to slow down, and in some areas it is falling off of a cliff. In fact, in areas in LA, Beverly Hills, the mega mansions, that whole market, that high-end mega mansion market is in big trouble. They've overbuilt, and now they don't have the buyers to purchase these $20 million plus properties in Los Angeles. Here's some more bad news. The Gap reports earnings today, and it was not good. Their stock is down 15% since the last earnings report. Stock is nearly down 40% since 2017. Might actually be down more than that. This was before the earnings report came out. Shares tanked an additional 10% today, so they're basically down 50% from where they were in 2017. So they're down 10% in after hours trading. Revenue was predicted to be 3.77 billion. It came in at 3.71 billion. So it did not meet expectations. Their sales were down 4%. They were expected to be down 1.1%, and they landed up being down 4%. They're planning to close an additional 130 stores in the fiscal fourth quarter of 2019, and 21% of their product now is manufactured in China. More bad news. You got the children retailer Gymboree. They will file bankruptcy for the second time in 2 years. They're expected to liquidate all remaining 900 stores. So the retail apocalypse continues. Now, what are all these people going to do for employment? All these people that work in the service sector that are starting to lose their jobs, these people in retail losing their jobs. JCPenney's is closing another 24 stores in 2019. Zales Jewelers to close another 150 stores in the fiscal year of 2020. Payless will close all of their stores, all their US stores. That's 2,300 stores in the US this year. And we could take hours and just go over the devastation taking place in retail. Every day somebody is announcing additional store closures. Barclays announced today they're tired of taking the Tesla blue pill. They slapped Tesla with a $150 price target. That is down from $192. Tesla also in massive trouble. So we're going to continue to lose more retailers. If we lose Tesla, that is going to be a massive blow to what is happening today to this economy. Uber reports, now this is interesting. We have so many companies on Wall Street that are being traded that make absolutely no profit, making no money. In fact, they're bleeding money. They're bleeding out, yet the economy is good and the markets continue to go up, although they've been getting hurt here as of recently. Uber reports record cash burn, $1 billion loss in the first quarter as a public company, yet the economy is good. They say what worked in the past isn't going to work this time. We have an economy today, we have a society today that survives on credit. Credit can generate a rapid expansion in a credit-starved economy. Credit-worthy borrowers borrow and spend on consumer goods, real estate, etc. This drives expansion. But once credit is saturated, saturated in economy, the only pool of borrowers left are unworthy borrowers. The only projects left unfunded by credit are laden with risk. What happens now when these businesses, these corporations, these households, individuals, what happens when they're tapped out on debt? What happens when money no longer is cheap? What happens when they are tapped out? If you run up 5 of your credit cards, it's going to be hard to get that 6th credit card because you are tapped out. These corporations who are getting the cheap, easy money, what happens when that stops? The good old days that we witnessed with this credit expansion, I believe those days are slowing down. I believe those days are going to come to a stop, to a standstill. And when credit stalls, we are going to see massive problems here in America. And we have so many things that are going to cause massive problems here in America, but one of the main drivers will be when credit stops. It's going to be a problem for companies, business, corporations, and it's going to be a problem for the American household who have been so spoiled with the amount of easy money, multiple credit cards. When people no longer can use credit, many of these people right now using credit cards just to exist, to pay for necessities. What is going to happen to these people who are living off of credit cards just to exist when they're tapped out, when they no longer can pay, but they're now defaulting on these credit cards? I believe we're getting very, very close to that time as we're seeing people now defaulting at a record level on credit cards. Highest amount of defaults that we've seen now in the last 10 years is happening right now. 7 million people delinquent on their auto payments. And again, this is just the beginning. We technically aren't in a recession yet, although I believe we are in it. It has started, but nobody has admitted that we're in a recession. So imagine when this thing picks up. We are just in the beginning of it. This recession is going to be very long. It's going to be a very difficult recession. I believe that it's going to be a very, very bad recession. So I believe this thing is going to last a lot longer than most people are going to think it's going to last. And I believe it's going to be much deeper of a recession than most people think. I believe that this is going to be much worse than 2008. So we've witnessed literally a decade of expanding credit in a credit saturated economy, which has only set up the cascading defaults that are coming to America, that are starting right now. Doing more of what failed, okay? Doing more of what failed will push this economy into recession. So what do we do when there's a problem? What are we going to do as soon as this market really capitulates and falls off a cliff? We're going to print more money, we're going to see quantitative easing, and we're going to see interest rates drop to the floor. If not going negative. That's what we always do. That's the answer. Print more money out of thin air and drop interest rates. The real solution to soaring defaults isn't giving free money to borrowers to service their debt, or printing trillions of dollars to buy ourselves or pay our way out of debt. That's not going to work. The initial wave of money will work wonders in the beginning, okay? If tomorrow they dropped interest rates a half a point, yeah, the market's going to skyrocket. It may go up for a week or two, but eventually it's going to have negative effects on this economy. So it's like a shot of adrenaline when they drop rates, or they print more money and we see more quantitative easing. Yes, it's going to be a shot of adrenaline to these markets. But in the long run, it's going to have devastating negative effects on these markets and this economy, because at some point you got to pay this back. And while you're printing all this money, you are devaluing what is left of the US dollar. So as each and every one of you witness this collapse unfolding right before your very eyes, it's like it's happening in slow motion. And we're witnessing this. As all of us watch this happen, over the weekend, DHS, this is on Breitbart today, DHS releases 5,000 people, you know what kind of people, into the US over Memorial Day weekend. I have to be very careful what I say. So as everybody's drowning in credit card debt, as everybody's trying to pay their bills, while people are living paycheck to paycheck, while people are hoping not to default on their auto loans or their credit cards, just know that another 5,000 people have been released into your country that we're going to be paying for. And check this out. This was also on the news today. California Assembly okays healthcare for immigrants in U.S. who did not come here legally. So as you're living paycheck to paycheck, as many people are sleeping on the streets, as we have vets on the streets, as people are buried in debt, as people are just trying to stay alive and paying their bills, here in the state of California, you're required to pay for people from all over the world who go to the doctors, who go to the hospital, who are going to have kids. Some of these people racking up massive medical bills, people coming over here sick. You're going to be responsible to pay for all this. So when people ask why they can't get ahead, well, you can't get ahead because you're overtaxed and you're paying for people from all over the world who shouldn't be here. You're paying for them to have their kids. You're paying for their medical services. You're paying to take care of these people. When they sneeze and go to the doctors, you are paying for it. So maybe you can't feed your kid tomorrow, but you're going to be paying to take care of somebody from Bangladesh or Somalia or El Salvador or wherever they may be. You're going to be paying to make sure that they're healthy, that they're getting the best medical treatment possible, while maybe you can't buy your kid a birthday present or Christmas presents, or you can't take your kid to the doctors, you can't take your kid to the hospital, but they're going to take their kid and you're going to pay for it. There are so many people out there asleep who have no idea what is coming. People out there who believe this is just going to blow over, that believe that this has been going on for a decade, so it's going to go on for the next 100 years. And then there's people out there that are completely asleep to anything in regards to reality. When you see a 10-year Treasury yield at 2.21%, you better get worried. This is a massive warning. Let's talk about Deutsche Bank, okay? A share of Deutsche Bank today was $6.91. Where is the breaking point for Deutsche Bank? Is it $6.50, $6.40, $6.10? Who knows? But it's getting very, very close. To give you an idea, I believe back in 2006, a share of Deutsche Bank was $88. We are now at $6.91 and falling. And let me remind every one of you, Deutsche Bank is sitting on 50 trillion with a T, $50 trillion of derivatives. Okay, let me tell you what that means. That means they're sitting on about 10 nuclear bombs. If Deutsche Bank goes down, it is literally going to be Lehman Brothers times 1,000. And it is going to blow up the financial system across the globe. And nobody, including you, is going to be immune from the ramifications of when Deutsche Bank blows up. It is going to blow up so many other banks. It is going to be just massive grenades going off, nuclear bombs going off all over the place. It's going to be insane, and it's going to take down banks across the globe, including right here in the United States of America. It's probably going to wipe out emerging markets. It's going to be an economic nuclear bomb going off right here in America, and multiple nuclear bombs going off across the globe. So we have Deutsche Bank now at $6.91. We've got the 10-year yield at 2.21%. I don't know what anybody else needs to wake up and see what is going on, other than go out and take a look at your local retailers as they're being annihilated. What is a share of JCPenney's today? 91, 93 cents? I mean, yet these markets have been so manipulated and have manipulated so many people into thinking that things are okay, and they're not. The patient is on the stretcher, he's on the deathbed, okay, with tons of tubes and needles in his arm, and they're doing everything they can, including injecting large amounts of adrenaline. And this is what they're going to do: more quantitative easing, drop rates down to the basement, down to zero, negative if necessary, to keep injecting adrenaline into this patient so that they don't lose the pulse. Here's a news flash: the patient is going to lose the pulse. The patient is going to flatline, and when he does, all hell is going to break loose in America, and it is going to affect every one of you out there. Don't be a casualty of this. Don't be a statistic. Be prepared and be ready, because it is much, much closer than it was yesterday. We are probably in the riskiest credit market the U.S. has ever seen in regards to size, duration, quality, and lack of liquidity. This is very similar to what was happening in 05, 06. And again, this is why I just feel like it's 2007 all over again. We see it in the buildup in corporate leverage, the decline in credit quality, and the declining underwriting standards. All this late cycle credit behavior we all began to see in 2005 and 6, and we really noticed it in 2007, right before the rug was pulled out. So again, there are so many similarities to what we saw back in the mid 2000s, and it's repeating, except the debt is way bigger now. The cliff that we're going to fall off, is much higher than it was 10 or 11 years ago. And I believe that the amount of people who are prepared for this is probably less than the amount of people who were prepared in 2008. For the people who went through 2008, for those people, if you're not preparing and protecting your families right now, shame on you. Anybody who went through 2008 should know better. It's absolutely amazing how quick Americans forget about terrorist attacks that have taken place, how quick they forget about these major wealth transfers, 2008 being the biggest wealth transfer America has ever seen. The next one is going to dwarf 2008, as it is going to be a massive wealth transfer. Shame on you if you went through 2008 and you're not preparing and protecting your family. Now, for the people out there who were too young to remember it, you need to really pay attention to what's going on. You don't want to be a casualty like the people were in 2008. People who lost their retirements, their 401ks, their portfolios, the people who were 70 years old and got wiped out and had to go back to work after that. Could you imagine being 70 some odd years old, having a couple $1,000,000 in retirement and getting wiped out? What are you going to do? You do not rebound. So if you're young and you were too young to remember 2008, take my advice and prepare right now. There were massive deals to be had with people who didn't have massive amounts of debt, people who had cash, people who had assets. They capitalized. They made a lot of money during this crash. The people who had bought houses and lived way beyond their means, way over their heads, racked up massive amounts of credit card debt, driving cars that they really couldn't afford. These people lost everything. They lost their houses, their cars, their credit. They could not capitalize on anything. They were barely staying alive. You do not want to be one of these people. Take my advice right now and start preparing. Have an emergency fund put away. Start putting assets away. We don't know if we have another week, or another year, or another 10 years, okay? But every day that we have, be prepared. And most of all, get closer to God. Make sure you're topping off your preps, food and water. This could be much different than 2008. America is going to be rocked. There is going to be a reckoning taking place here politically, socially, economically, and spiritually right here in America. And I pray everybody watching this video is going to wake up if you're not awake, and you're not just going to get prepared with preps and money and assets, but you're going to get prepared spiritually and be on the right side, be on the godly side here, because none of it matters unless you're walking closer to God. Nobody's perfect. Nobody will ever be perfect. But every day, just try to live a better life, be closer to God, get in better physical and mental and spiritual shape, and get in better financial shape. Get the debts paid down and start putting assets away. The two most undervalued assets in the entire world are gold and silver, and they are on sale right now. And let me repeat this for everybody out there. I do not sell gold or silver. I do not work for anybody, okay? I work for nobody. But if you're looking for gold or silver, my recommendation is SD Bullion. Link down below. They've been fantastic to me. They've been great to people who watch these videos. And I got turned on in the comments by people who said SD Bullion is the place you want to buy your metals from. So I believe in them. I've had fantastic luck with them. I've had a good rapport with them, and they're awake. So if a lot of people down there in the comments ask, where should I get it from? I'm going to recommend SD Bullion, although I don't care where you get it from. I just believe you need to get it. You can get it at your pawn shop. You can get it at a coin shop. You can get it at, the multitude of dealers online. I don't care where you get it. What I do care is that you are acquiring assets, paying off debt, putting some cash away, topping off your preps, getting proficient with firearms, because security is so important. It is so important to make sure that you are training and that you have your security in order, because you cannot protect food, water, or any hard assets unless you have security. I see in the comments that a lot of people say that all these retail stores are closing because of e-commerce, because of Amazon. These stores are closing because people are getting tapped out. Their credit cards are running out. People's paychecks are not keeping up with inflation. These service sector jobs, these $10, $12, $14 an hour jobs, people cannot support themselves. 30 to 50% of people's income is going to rent or to pay mortgages. Retail is going under because people are going under. People are broke. They're tapped out. I'm blown away every time I go out and how many people I see in their Lexus, their BMW, driving for Uber and Lyft. This is where we're at as a country today. This is reality. People now having to drive, becoming modern day taxi cab drivers, driving their own cars in order to make ends meet. So somebody might be working a job and then having to work, 10 or 15 or 20 hours a week as an Uber or Lyft driver to make ends meet. This is why retail is going under. It's not e-commerce and Amazon. Does e-commerce and Amazon have anything to do with the 7 million people who have defaulted on their car payments? Does that have anything to do with people who are defaulting on their credit card payments? Does that have anything to do while we are seeing home sales falling off of a cliff? No. It is because the economy is slowing down. It is because people are broke. It is because people are living paycheck to paycheck. People have no net worth. People are not saving any money. What was the latest statistic? 22 or 25% of America has zero money saved up. 40% can't cover a $400 emergency. Okay, that has nothing to do with Amazon. People are tapped. They're broke, they're defaulting, and this is during the good times. We have not had a major event happen here in America yet. Just imagine when these grenades and these bubbles start going off, when these bubbles start popping, everywhere you step is going to be a freaking grenade, and they're going to be going off. And this is again why I'm so concerned about everybody out there and why you better start waking up. You better start getting prepared. And many of us have gotten complacent because nothing has happened in 10 years. But this bubble that is coming, this collapse that is coming, these major bubbles that have been set up, this agenda, this has all been orchestrated. These bubbles didn't happen accidentally. They've all been made. They've all been man-made. They've all been manipulated. They've all been these assets, these asset prices, these stock prices are so overvalued, but it's all been done that way for a reason, okay? They can't create a massive bubble in a year or 2 years or 3 years. They cannot create a massive collapse in a couple years. This took massive amounts of time and manpower to orchestrate what we're going to see. This is going to be the biggest, most overwhelming wealth transfer the world has seen, and it has taken years to orchestrate. There's many architects that have designed this collapse. They're going to weaponize this collapse to bring this president down, to bring this country to its knees, to bankrupt each and every one of you while they take every bit of wealth that they didn't get in 2008. They've suckered everybody back into these markets, these overvalued markets with these overvalued assets, these sucker rallies. They've suckered everybody back into it. And people have stayed at the poker table too long. So many people could get out right now, but they won't because of greed. And these people are going to stay in too long like they did back before the last Great Recession, before the last great collapse. They stayed at the poker table a little too long and they got burned. Don't be one of these people. This is no time to be taking risk or chances. Do that when there's blood in the streets. When everything's collapsed, that's the time to take risks. That's when everything's on sale. That's when stocks and real estate and these assets are on sale. Right now, the only two assets on sale are gold and silver, and they're going to be the safe havens. And when this thing collapses, you're not going to get gold and silver at these prices. You're not getting silver in the 14s. You're not getting gold in the 12s. Not going to happen. Take a good look why central banks and countries around the world are hoarding gold right now. They know what's coming. Just like the people that pulled $429 million out of the market on Tuesday, they know what's coming. Central banks are leveraging their bet with gold, okay? They're protecting themselves. So you need to do the same. You need to be your own central bank. You need to be betting against the debt. You need to be betting against the dollar, because this whole thing is an illusion. It's a facade. And millions and millions and millions of people are going to get destroyed over it. Don't be one of them. God bless you. Talk to you very soon. Pray for this president. Pray for the United States of America. And get ready, because we are about to see historical events take place right here in the good old US of A.